Hello traders, and welcome to our week ahead webinar on this beautiful Friday. This is the week ahead report for the week of September 6th to the 10th. My name is Angelos and I'll be heading this event. And I want to make a start by saying, moving into September's first full week, traders have an amazing economic calendar to work with a variety of currencies and instruments being involved, allowing possibly for a considerable range of options for traders. The upcoming week will include a number of star economic events like interest rate decisions from the ECB, the RBA, and the BOC, which tend to be of crucial interest for market participants, but also traders, as they can create significant volatility during and at the finale of the meetings. In our week ahead report, we will present a breakdown of 6 major currencies, fundamentals currently surrounding them, and what to keep an eye out in the following week. So we start first with our risk warning and disclaimer. And our first currency for this week will be the US dollar. So I'm going to read the fundamentals first, and then we'll get into the technicals. So USD remains weak, yet stock markets gain. During the current week, economic releases from the US had provided mixed signals. While when the data was positive, they were not very much appreciated in terms of the greenback's reaction. This is evident also in the chart. At the start of the week, the consumer confidence figure for August was disappointing, but moving forward, manufacturing data for August was positive, while the initial jobless claims figure dropped to a new pandemic low, and the US trade deficit dropped more than expected in July. According to the dollar index, the USD is about to finish the current week in a loss against most of its major current counterparts. We must note, this is the second consecutive week the greenback ends lower, yet traders at the moment could be focusing on other markets. The major US stock markets seem to be absorbing a lot of action at the moment, as the risk-on sentiment could be at its peak. The Nasdaq and the S&P 500 have gained new all-time high levels for the second consecutive week, while the Dow is possibly closing the week flat, remaining at high levels. However, not many updates on monetary policy in the current week, as Fed Chair Jerome Powell basically received most of the attention in the Jackson Hole Economic Summit in the previous week, when he noted the Fed can start tapering by the year end, but interest rate hikes are not in the picture for now. An interesting view was provided by former Federal Reserve official Dennis Lockhart, who believes an announcement for tapering could be made in November, which could buy more time for the Fed to monitor economic developments. Also, during this time, the Fed can get the summary of economic projections, which will be coming later in the FOMC September meeting, and they could get that out the way. Moving to the week ahead, USD traders will have a rather light economic calendar. We get the JOLTS job openings for July on Wednesday, the weekly initial jobless claims on Thursday, and the PPI rates for August on Friday. Also on Wednesday, we get the Federal Reserve Bank of New York President John Williams' speech on the economic outlook and monetary policy. And on Thursday, Federal Reserve Bank of Dallas President Robert Kaplan participates in discussion of economic developments and implications for monetary policy. Excuse me. And we move now to our technical analysis. Please note this is the USD index 4-hour chart. Clear downward trend line. Price action leaning towards the S1 9180, which could be the first support to be met. Below that, we go to the 9150 and even lower to the 9130. However, an upward momentum could send the index back to the R1 9220, with the next level being the R2 9250. There's some stabilization at this level, so it's a possibility that the next stop will be here. And at the top, we have the R3 9275, which again, we see a lot of stabilization at this level, and thus we consider it an accurate resistance level. RSI indicator below 30 at the moment. Oversold position. Please note, in a parenthesis, this is all the charts that you will be seeing today have priced in the NFP figures that came out today, the 3rd of September. So the charts all indicate the price action that took place during the non-farm payrolls figures that came out. Moving to our next currency, which is the pound. So the pound is about to end the second consecutive week upwards against the USD and marginally lower against the euro. In the current week, GBP traders have very little economic releases to work with as opposed to the week ahead, which seems to be extremely interesting for the pound followers. In the past days, nationwide house prices rates were much stronger than expected, while the market final manufacturing PMI was also slightly better, which both tended to support the GBP. In the week ahead, we tend to highlight the Halifax house prices for August on Tuesday and a very busy Friday, which is the 10th of September, with the GDP rates, the industrial output, and the manufacturing output rates all for July. In addition, according to many sources, in the following week, UK Prime Minister Boris Johnson is expected to announce a tax hike to cover for social care costs and increase funding for the National Health Service. This can move the pound, thus caution is advised. Now, technically, we see GBPUSD in an upward momentum. If the momentum upwards is to continue, then the R1 138.80, in our opinion, is the most possible resistance level to be met. Above that, if that level is breached, then we can go to the R2 139.20 and even higher to the 139.50. However, a resurgence downwards to the S1 138.20 is also possible. This level was reached in the prior session. As you can see right here, it was tested but was not breached. And lower than that, we have the S2 137.75, and at the bottom we have 137.40. Now, at the moment, the RSI indicator is just on the 70 level, which implies the bulls are controlling the market. And that's it also for the pound. We move now to JPY. JPY, at the moment, the JPY is nearing its third consecutive week lower against the USD, while it's also lower against the euro and the pound. Today, in a rather unanticipated fashion, Japanese PM Suga announced he will be stepping down from his position and will not be running for leadership in the ruling Liberal Democratic Party. According to a report by Bloomberg, PM Suga had taken criticism as virus cases surged across Japan in the weeks after the Olympic Games in Tokyo. Japanese stock markets surged upon the news, while USDJPY gained approximately 25 pips upon release of the news. In the past days, the Japanese economic data releases provided mixed signals as the unemployment rate fell, but industrial output remained in negative territory. In the following week, we tend to note the Japanese GDP rates for the second quarter and the Japanese current account for July, all to be released on Wednesday's Asian session. So technically, USDJPY remains mostly trading between our R1 110.35 and our S1 109.80. By the way, the USDJPY, in my opinion, is very similar to USDCHF. They're both trading in a small, tight range. Not a lot of price action, not huge moves, just using the regular range between the R1 and S1 as noted. In my opinion, if the S1 is breached downwards, then the S2 109.20 can be met. This was also met in the beginning of August. Lower than that, the S3 108.75 is also imminent. In case of an upward momentum above the R1 110.35, we see the 110.80, which was also last tested in August. And higher than that, at the top, we have the 111.50 level. At the moment, we see the RSI indicator moving just below 50, which implies some ambiguity among traders, we could say, and some uncertainty. And that's it also for JPY. We'll move now to the euro. ECB interest rate decision anticipated. So the previous week has been rather solid for the euro, gaining ground against both the USD and the GBP. Inflation data from the Eurozone, Germany, and France was solid and surpassed expectations, implying the economic circumstances in the bloc are improving drastically. Unemployment in the Eurozone for July and unemployment in the Eurozone for July and unemployment in Germany for August came in lower, which again imply the job market is improving and hiring is up. Nevertheless, specifically, the rise in inflation seems to be worrying policymakers at the moment. According to Reuters, Bundesbank President Jens Weidmann sees the increase in inflation rates as a risk, while our opinion is that the ECB interest rate decision and monetary policy meeting next week comes in very handy at this point when this economic data is released and we have this type of levels of improvement. So the Eurozone is evidently in a stronger economic position currently, and the ECB meeting on September 9th will provide the bank side on this front and what they intend to do as of these updates. At the moment, overnight interest swaps imply a probability of 95.83% for the bank to remain on hold at minus 0.5%. Some analysts see the ECB remaining in a wait-and-see position in the upcoming meeting, not making any substantial changes, but confirming the improvement of the bloc's economy. CNBC claimed the ECB may be targeting December as the time to announce changes in policy if circumstances continue to move in the same direction. Moreover, ECB chief economist Philip Lane also said in an interview last week that September is very far away when he was asked if the purchases under the Pandemic Emergency Purchase Program are still appropriate at that level. In the week ahead, we start with the German industrial orders for July on Monday. On Tuesday, we get the German industrial output for July, the French reserve assets for August, Germany's ZEF economic sentiment for September, and the Eurozone GDP rates for the second quarter. On Thursday, we get the chief event of the week with the ECB interest rate decision and its accompanying press conference, which can move the euro extraordinarily. Thus, caution is advised. On Friday, we get the German final inflation rates, while the Eurogroup meeting will also commence. So technically, Euro-USD, this is the 4-hour chart, clear upward trend line, which is characterized by our ascending line on our chart. There was an attempt for the R1 119.20 in the most recent sessions, but the currency pair was unable to break above it. Now, please note, this is the highest level for August and possibly the latest part of July, which is where the basically the chart starts. So this today we had the highest level reached for the pair, maybe in a 2-month range. Above the 119.20, we see the 119.55 as the next possible resistance, and higher the 119.75. If the currency pair returns lower, we could say the S1 118.60 could come into play first. Lower than that, we see strong support. We could say at the S2 118.35, and even lower the S3 118 is the next one. At the moment, the RSI indicator is above 70, with buying orders possibly controlling the trading activity. So we move next to the AUD, RBA interest rate decision eyed. So the AUD has been exceptionally strong against the USD in the past week, and it is currently mirroring the NZD's activity. If you see NZD USD, NZD has reached multi-month highs, but AUD is also reaching multi-month highs. So in the past days, the AUD may have possibly been supported by the Australian GDP rates for Q2, which came out better than expected, while the trade balance for July was also notably higher. The pre-mentioned data is very important and point to economic expansion for the Australian economy. Yet the only important event for the AUD next week is the RBA interest rate decision on Tuesday, as we will be crossing from the Australian session into the European morning. In its previous meeting in July, RBA stated it had a plan to transfer into a flexible, scaled-back bond buying program. Yet since July, most of the threats that surround not only Australia but the global economy remain elevated. At the moment, overnight interest swaps give a probability of 99.22% for the bank to remain on hold. An interesting view from Westpac stated that RBA may not be tapering its QE program during the upcoming meeting, yet in this scenario, market reaction could prevail, possibly weakening the AUD. Now that's Westpac. Finally, Chinese data that could also affect the AUD will be released on Tuesday. So Chinese data that could also affect the AUD will be released on Tuesday, with the trade balance, and on Thursday, the inflation data, both for August. Once again, technically, this is AUD's 4-hour chart, cleared upward momentum, multi-month high. First resistance could be the 0.75 level. Above that, the 0.7530, and even higher, the 0.7565. Lower, if the currency pair is to move lower, the S1 0.7440 is imminent as the first possible support. Lower than that, the S2 0.7515 follows as the second support. This level was tested in the beginning of August. Thus, it is a very strong, we could say, there's a strong possibility to be met in the scenario of a bearish momentum. Even lower, the S3 0.7385 is our last and final support. And that's it also for the AUD. Moving now to our final currency, which is the Canadian dollar. Bank of Canada interest rate decision in focus. Now, the CAD is currently gaining ground for the second consecutive week against the US dollar. In the past days, Canada's GDP rates provided mixed signals. The GDP rate for the second quarter moved in negative territory, while the monthly rate increased and moved in positive area. On the other hand, the final market manufacturing PMI was higher, and Canada's trade balance for July dropped much lower. In the next week, CAD followers will be expecting the Bank of Canada's key policy rate interest rate decision, and it will be on Wednesday. All overnight interest swaps imply a probability of 98.32% for the bank to remain on hold at 0.25%. At the moment, some analysts tend to believe that the BOC will not be calling for tapering, and it could wait for October to make such an announcement. With the unemployment rate declining further in July and inflation rates being strong, the bank may have more time to see how things will play out. On Thursday, Bank of Canada Governor Tiff Macklem. So on Wednesday, we have the interest rate decision, and on Thursday, Bank of Canada Governor Tiff Macklem will give a speech explaining the central bank's interest rate decision. We would also like to note the Canadian employment report for August coming up on Friday. Finally, at the moment, Canadian Prime Minister Justin Trudeau may be struggling ahead of a September 20th election. Now, the September 20th election is an important event, and that's an event to keep in mind for the future. So closing with our general comment. As our closing, we would like to note some important factors that we have not mentioned in our report, but are currently affecting the global markets, and especially the largest economies, including the US, China, and the Eurozone. First is the global supply chain problem. As Bloomberg stated very nicely, manufacturers are currently in a difficult position due to shortages of key components and higher raw material and energy costs, which is forcing them into bidding wars to get space on vessels, pushing freight rates to records and prompting some exporters to raise prices or simply cancel shipments altogether. This is also among the reasons that inflation is on the rise globally. Second is the pandemic, which we have not mentioned at all in regards to the central bank meetings coming up next week, yet most of the decisions made or not made at this moment are based on developments on the pandemic. The uncertainty and risks that seem to remain with us in the past months and in the present can be difficult to forecast in the future in terms of economic performance. Always keep that in mind. So even if you see projections by central banks, keep in mind that it could be very challenging to meet them. So I want to say thank you. Special thank you to the webinar group and marketing for putting this together. Thank you to the research group, and many thank you to our viewers. We appreciate your time, and we aim to provide more valuable trading information in the near future. If you would like to contact us for any reason, question, trading idea, concepts that interest you, please do so with an email to research_team@ironfx.com. From everyone here at IronFX, wishes for solid trading.